Unfiltered opinions.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
Good morning. Welcome to another episode of Insider Exchange. Thanks for tuning in, folks. This week, you might see things looking a little bit different in studio, and that is because Sai is out with the man flu, so I've had to call in some serious reinforcements, in particular reinforcements that wouldn't be affected by the man flu. So co-hosting me for this week's episode is going to be a good friend of ours, Mushima Gama. She joins us in studio, but alongside that, for our Market Matters, as you can see, Market Matters is sponsored by Trive for this week. We thank them for continuing to help us do the work that we do and for sending Sean Dendera to keep joining us in studio for all the madness. Sean, thanks again, as always. He never looks happy to be here, but we love having him here.
Very happy to be here.
We love having him here. We're going to be taking a look at a couple of things. We're going to be looking at gold. We're going to be looking at the Trump sanctions. We're going to be looking at opportunities in terms of what news might be coming out, what stocks might be interesting to look at, and everything else in between. I think before we kick off, I found it very interesting that the Trump is having a war with everybody, right? But the Trump-Canada war took a very interesting twist this past week, or the US-Canada war took an interesting twist this past couple of weeks or so. Actually, the last weekend and now into last week with Kendrick winning the 5 Grammys and then going on to perform at the halftime concert. That was clearly the best evidence of USA versus Canada I've seen in the longest time.
I think it's the only credible one because
That's it, because everything else, tariffs and everything, not interesting, but not like us.
Exactly. Drake versus Kendrick. Fair enough.
Yeah, that was an interesting development. I mean, especially coming off of, again, the Grammys going into Super Bowl being such a big event, right? And it's Americans think it's the biggest thing that happens, and you look at the numbers and you're like, it's not that big in the outside world. But okay, we'll let them have
FIFA
that.
World Cup, right?
It's not, right? We'll let them have that either way. The halftime performance taking everybody by surprise, and Kendrick clearly getting out of a lawsuit with some technicalities there as well. That seems to be the flavor of the month, right? That's just like,
look, we need some reprieve. We really do. From all the information, we just need something.
we need a break from Trump,
We need a break.
which we're not getting, eh, Sean?
I don't think we're going to get that for the next 4 years. It's going to be Trump every week.
3
So,
weeks into it now.
I mean, one of our colleagues mentioned we shouldn't be speaking about Trump the whole time. But what else is there to speak about? Trump.
Sanctions on South Africa because of the land. I saw the Rand reacting to that, and the Rand strengthening was a clear sign that the markets think he's crazy. Because the Rand, for all it's worth, is a very politically driven currency, policies and all. And for once, you're looking at it and it's not the policies of South Africa that are working against us. At this point, it's South Africa's calm and Donald Trump's erratic behavior.
True.
Quick question, right? Okay, the Rand is strengthening, but do you think from a political landscape that the powers that be are responding accordingly, and that's why, the Rand is still a bit steady? Because we haven't panicked. We've gone out and tried to explain, guys, it's actually not expropriation without compensation. I mean, I was speaking to someone over this weekend, and he was saying that if we look at the act, which I have not read, so I cannot confirm this information.
Yeah.
But you're saying that first tier is that we're looking at land that's unoccupied, unused. So we're not going to now go and say, Mushima, we're taking your land. Jimmy, we're taking your land. Whomever, and so on and so forth, right? So I think that from a South Africa perspective and for preservation of our economy and the beloved Rand is we just need to find a way to not be, as Cyril said, bullied and explain our stance and stick to the stance, whether we believe it's right or wrong. Let's protect our sovereignty as a country.
Well, I will come back to that question. I want Mushima to answer it first because she believes that she doesn't want to live on Earth anymore. So
Fair enough.
That was private.
yeah.
It's true. I think, I don't really think it's the land issue. Mostly, I think it's just a cover up. It's more of the Israel thing that is now causing him, making that gout inflamed. But and if we stick to our guns in terms of the humanitarian part of things as to why we did it, then it's about time that we get all this aid cut off, guys. Because that's how we just put in that chokehold. And I mean, not knowingly to Trump, he's literally going to start causing a decline in the dollar with what he's doing, because a lot of people are pulling out because it's now Trump and Elon. It's not just Trump, right?
Exactly.
And now Elon is I mean, have you read one of his biggest investors are starting to pull out of Tesla's, their shares, and asset management in Europe. I think it's about $230 million or even more that are pulling out. So
nice.
they're causing trouble, which I think is kind of necessary to change the status quo that we've been under, particularly in Africa.
Exactly.
No, we were having this chat. I remember having this chat with Sai last week as well, after we finished our episode, to say that Donald Trump could quite possibly be the catalyst that causes the decline of the dollar that he's trying to prevent.
Yes.
You know what I mean? And that's because of the radical behavior and what we're seeing in the markets. On the other side of it, on the land issue and what's happening in South Africa, the political maturity, aside from the debates that are happening on X and all these other platforms, whether it's right or wrong, that's different conversations for another time, right?
100%.
What you mentioned, Sean, quite importantly, around what's actually happening and how the responses are being perceived in the market is kind of what's been driving, again, things like the dollar, things like the rand against the dollar, but also when you just look at where risk is. We're going to look at gold in a second. And for the first time, everybody's like, yeah, we're going to stay away from that corner of the world.
Exactly.
Yes,
Because
literally.
you actually don't know what's going to happen, right?
It's so erratic. Like it's so
Exactly.
now it's the war with the straws. Like what
Oh,
is the
yes.
next
Yeah,
shit?
Yes, down with paper straws. We're bringing back plastic.
straws,
Those are not
literally.
my words. Those are the words of the 47th President of the United States. Please do not quote me. Thank you. Yes, the straws are another thing that
What's
people
gonna
are
be
fighting
today?
about.
Like we don't know.
There was
Every
a point
day.
I wanted to jump on, which you mentioned, right? And we mentioned this last week as well about the funding, right? Like last week, I mean, we say that maybe it is a good thing, right? Because it allows us to recreate ourselves, right?
Reevaluate, yeah.
Reevaluate, see how we can become more self.
Who are we without the money? Find out who we really are.
Exactly. So there is positives and negatives. Obviously, there are people that depend on the aid and the money that was coming in. But long-term wise, we got minerals. We got a strong financial sector.
Exactly.
We just need to find a way to consolidate and ensure that the country actually grows in the right direction. And then we technically do not need aid if we get GDP to
Also,
the right
the aid
point.
has been cut over the years. It's not the first time they've been cutting it. So we've been knowing that they're going to cut aid.
Exactly.
It's about time we change.
I listened to the State of the Nation address last week, Thursday, and I found one or two of the points quite interesting. One of them was that around the aid that South Africa gets from the US for things like HIV and TB treatments and all of that. Cyril mentioned that President Ramaphosa, mentioned can't call Malume Cupcake just by his first name like we know him like that. We don't know him like that. I apologize. The president mentioned that I think only 17% of that funding still comes from the US. In other words, South Africa has been able to make up the other 80%. So we're not necessarily going to suddenly stop these programs because we don't have that funding. And he mentioned very clearly that it's about just finding that balance and catering for the amount that's no longer coming through. To that point, there's already rumblings that China's happy to give us money for that.
Exactly.
But they're obviously happy to
What
back a
kind
lot
of
of
BRICS?
Double-edged
countries.
sword.
And that's the BRICS. That's the other thing, right?
Just
the BRICS
to-
conversation.
Exactly.
Yeah.
That's another thing that we should be. It's just Trump always feels like he's won with the whole Canada thing with the tariffs. The agreement they made was something that was already agreed on. So they're just putting, and he's like, okay, I won this one. Okay, cool. And now it's the sanctions South Africa, but they've already been. So okay, I won this one.
Your Canada thing just reminded me of something very interesting. Trump came out and said, we're undoing the worst policies or the worst trade deals or whatever that were put in place for Canada, right?
They're still in place.
Who put in place those deals? It was Trump in 2018. Trump is undoing Trump. That's exactly what happened here, right? So in 2018, he signed this deal and said, this is the best trade deal in the history of forever. Now he's come out and said, this is the worst trade deal. We can't have this. We don't know who put this in place. We're undoing it immediately. And suddenly he's the hero. How are you the villain and the hero in your own story?
It's an interesting way.
It's a
how
very
he
interesting story,
psychologically
eh?
gets to, yeah, it's
But
interesting.
this comes to the point of, and I'm glad you've got the chart up around the gold side of it, is the markets are like, we're just staying away. We don't want any of this. We don't know where it's going to go.
gonna
We don't know what's
go.
going to happen next. We just know.
Which is why gold then becomes the
Safe
focal
haven.
point, right?
Tell
Let's
us,
go.
tell us.
Let me tell you,
What are we
let me
looking
tell you.
at?
So what I've done literally is just show you. I've kind of looked at this gold chart a few times, and it's just the result of it was a bit scary because I thought, in what way could gold go there? But what you do in technical analysis, obviously look at what happens in the past in order to see what's going to happen in the future. So I'm going to flip on from the old chart to the new chart, so you could just see how this is probably going to pan out. So I've got the chart here to the most extended I would, which in a trading view, it gives me about 2002. But we'll look at it from 2006 up to where it really spiked up there. To
So
about,
around 2011, 2012-ish or so,
okay,
just
so
before that.
just note that that is a 6-year period.
Okay.
Now, I've kind of added the Dow theory so that you can conceptualize everything in terms of how the trends go. So the Dow theory states that every time there's optimism in the market, the trend becomes steeper. But the trend then becomes steeper when a particular trend line is breached. So in this case, in time, this key trend line from this first phase, and it's in 3 phases. So when it breaches the first phase, it becomes steeper. When it breaches the trend line of the second phase, the third phase becomes steeper. But the third phase is just like candles going up. The most scariest in the sense that you don't know when it's going to pull back, but the returns from that are juicy, you know? So this is a 6-year period. This was a point in time. I think all of this was post the Great Recession, and then it became the sovereign union in the US, rather in the Europe, sovereign debt in Europe, that then caused that that demand. And then this was that third spike thing. That third spike is usually the shortest, the juiciest, but you need to be in the second phase already. And then from there onwards, it then plateaus. So how you would then have calculated where it's going to go? It's always the width of the trend of the what you call the channel. So the channel there said it was predicted it would go to 1,655, and the channel breakout there predicted it was going to go to 1,825, but it just went up slightly to 1,920.
Yeah, but
right?
you covered, in both cases, you covered the full distance,
yes, the
if not
target
more.
of, yes. And then from that time, when that is complete, then the third phase is usually the one that triggers a potential downside.
Okay.
And when the third phase is done, it goes to the second phase. When that is breached, then it's just downside from there onwards.
Okay.
This is a 6-year pullback. And this is pretty much the time when there was a quantitative easing in the US. The dollar became more attractive. That caused the gold to pull back. Now, that was a 6-year. This is a 6-year from 2011 up to, when it broke out 2015, right? That's roughly. Now I'm going to squeeze to this part.
Well, December of 2015, so 2016 effectively.
Yeah,
So 6 years.
2016, yeah. So then this is our current place. So this little part here, this is where it broke out in 2000.
Okay, so that's what we just looked at. That's a small little piece there. Okay.
Yeah, so this part, so it broke out and then it started to do a funny plateauing here. That was really, it's just the most frustrating part when it's plateauing until it literally breaks out of its entire bear trend, which was part of the 6th year, which means then we're in, now take a look at this date. So it's 2019. What's a 6-year period?
2025.
2025, right? So this is the first phase, which is the blue part. It breached the upper slope. It's in the second phase.
Now we're getting ready for that third
Now we're
phase
getting
that you
ready
say is
for the
crazy.
third
Yeah,
phase.
I
so
see
was about to say.
3,400 on a chart. Whew.
I know. When I saw this, I was like, I think it's a bit too overzealous. Maybe just mention the shorter targets. Now, remember when I came on the last time, we were literally around here, and I mentioned that it might then go to 2,590. Which
No,
it
you
did.
called 2,610 and it hit exactly
yes,
that.
it went around there, but that was the target for this.
Yeah.
Now it broke out of a little flag thing. Rather a triangle thing that just says it's likely to go up to 2,990. Also heading to this slope here. RSI overbought means we should anticipate a bit of a pullback. Thank goodness, because some of us would like to get in, right?
100%.
Yeah, would like to get in.
100%.
So if it does pull back, I think the most it could fall back is 2,790, but it would still be within this channel.
So 2,800 or so odd.
So once it holds above there, now it has to hold above there in order for this to continue with its upside. The trick is if it doesn't and it breaches this upper slope. Remember, when the upper slope is breached, the trend goes, and the third slope is quite steep.
It could just start off.
So it could start off that trend to about the target of this, of the width of this channel upwards is 3,245. Now, if it does the 15% like it did previously, that means it could go to 3,440. And from there onwards, I think that's the time where we could then see that plateau, the part where we can see the 6-year.
Do you think that 6-year plateau would now be affected by the fact that of that 6 years that will now start, most of that will be under a Trump presidency? Do you think that might have, for the first time in history, potentially have a different outcome on the gold
inverse
price?
outcome, because at this point, I mean, what I'm showing you is pretty much the utopia we can experience with gold until it gets to 3,440 in this geopolitical dystopia we're in. And because gold then becomes a safe haven, and with all of this uncertainty with Trump, this is literally going to potentially start that third phase. And the third phase, and the previous one was about a month old. Third phases could be less than 6 months. But I figure towards the end of the year, we're probably going to start seeing some plateauing once it has at most hit 3,440.
I have a question, just I guess for the viewers. So this whole time while we're going into these phases, right?
Yeah.
What do we? It's a bit of span in the works, and we're not going to hold you to it. What do you think is happening to the dollar or the dollar index?
Because there's an inverse effect. Obviously, the dollar would then be, the dollar is already starting with, there's an inverse, so it's pulling back whilst this is going up. There are cases where it's now, remember, you have to buy the dollar in order to get gold.
Precisely.
Yeah, the gold is priced in dollars.
So if you're getting more dollars in order to get the gold, that's obviously going to push, that's demand for gold. So then there is a time when there's a decorrelation because of this uncertainty that's causing that. But then once it's reached a particular point in time, and the dollar and gold, when it gets to the third phase, this is just based on technical analysis and the psyche of people, that when it is in that, then you're right, there is that inverse effect where gold is going to pull back and dollar is going to go up. But it's going to be a gradual, at some point, the dollar has to pull back from the levels that it's in.
Okay.
Right? But I think the correlation, there is a sense where there is a decorrelation. It's not always the same, but there is a decorrelation at some point. And I think this is when the fundamentals then come into play, where we will see that decline in gold of some sort.
Cool, because I'm a fundamentals guy, so hence I was asking the question.
No, it's definitely going to be an interesting time. I'm looking at a gold chart now. Current price just under $2,900 an ounce. We are obviously
Very close.
very optimistic around where we could be going. But folks, you know the disclaimers. This is Moshima's analysis.
Yes.
Do your own. Do not come back and say
This is
you got
she
financial advice from her. This is what she said. This is what happened. Do your own analysis. We happen to have a favorable opinion of her analysis, but that's from a different biased point of view. The disclaimer tells you we do not give financial advice. This is not financial advice. Sorry, Moshima, you were saying?
I was just saying that in the aspect where it doesn't breach the upper slope, then there'll just be a gradual move within the channel. But that upper slope is what will cause a breach from there, is what will cause that speedy or that celerity towards that quite quickly.
But also looking at that channel, if we say just tick along up through that channel all the way up to 3.2 even, right? And let's say we're still in the channel at 3.2. Surely that then says to me that when we break out of that channel, we're going to smash beyond 3.5. That just means it's going to be even more exponential at that point.
Yeah, it's a possibility. Because, I mean, the last, from 2020... From 2005 to 2011, it went up about 400 and something percent. We're only in currently from the second phase in the prior chart was about a 30% move. We're just under 30% now with the current move that we're in, and then there's additional 15 that we can anticipate. But that's if it breaches up a slope. If not, then it means it increases that that range band
Yeah.
and upward slope. So that's just the part we have to considerably look at, is if it breaches that upper slope, or else it will just zigzag or oscillate between these two slopes.
Folks, that's why Simon said last week that the only thing he's looking at the moment is gold. We're going to leave the conversation on that note for the live stream. We're going to dive into a couple of things in our deep dive and our investor insights. Thanks for tuning in. Thanks for jumping on to TikTok. Big shout out while I am looking at our TikTokers. We finally did. I mean, it took us forever. It felt like forever. It wasn't really forever, but it felt like a really long time. But we finally hit 20,000 followers on TikTok. Shout out to our TikTok community. You guys have been absolutely amazing. What we've absolutely loved is just the engagement and the feedback that you guys have given us, particularly on some of the conversations. I mean, the school conversation was one of them. Recently, the contactless payments conversation. You guys are absolutely on fire in the comments. Don't stop. Share your unfiltered opinions. Give us all of that, because that's how we build the community. That's how we grow together. That's how we understand things better. So yes, huge shout out to our TikTokers and our TikTok community. We're going to continue to see if we can get bigger and better from here on out. As I said, this is Market Matters for this week. We're going to move on to our deep dive. We're going to move on to our investor insights. And as you know, those segments will be out later in the week. Until next time.
Cheers.